Hello again, nice to see you. This is the fourth lesson of ACCA Financial Accounting. Today it's going to be about sources, records, and books of prime entry. Today we're going to learn where we get information for our financial statements. Subscribe to our channel, stay with us, learn ACCA with strategic education, and achieve success in your exams. Today, the first thing we need to learn is the source documents. There are a lot of source of documents. The first thing is the quotation. Quotation means the type of products that we have, that we are offering to our customer. The customer sees that we have these products. And if they are interested in our products, they start to order goods. So this is sales order. So the customer sends us the sales order where he writes what he wants and at what scale, how much he wants. Then we issue the invoice. So getting the sales order, preparing the goods that the customer wants, we issue the invoice. The invoice includes how much of what product at what price. So it includes the product names, the scale, and the price that the customer wants. So this is the invoice. We send the invoice to the customer. After that, the process continues. Then we issue the goods dispatched note. Goods dispatched note means we are saying we have dispatched your goods to a customer. So we are saying to a customer that we have dispatched the goods. The next thing, then the customer sends us the goods received note. Goods received note means, hey, I've got your goods received. So the customer has received the goods. The next thing may be receipt. Receipt is also a document. It means the customer has sent us the money and we have received the money. And now we are issuing receipt, meaning that we have received the money of the customer. The next may be remittance advice. Remittance advice means all the transactions. It's a paper including all the transactions between the customer and we. So it means all the goods received by the customer and all the money that the customer paid. So it includes these things. The next thing we need to learn may be the debit and credit note. Debit note means what? Debit note means we have sent the customer the goods, the customer ordered, and we have issued the invoice. The three things that the customer must check: what he has ordered, what he has received, and what he has to pay. He checks these three things, and if he finds something wrong, the problem with calculations or with sending the goods, something that he finds as a problem, then he writes the debit note. For example, if the money that he has to pay may be $10,000 more than what he had received, then he writes the debit note saying, hey, please, you've got wrong calculation by $10,000. Then we see that, the debit note, and then we also start to check whether the customer is right or not. So if we check it, and if the customer is right, then we issue the credit note. It means, please, the customer, you are right. Yes, the calculation was wrong by $10,000, and now I have decreased your debt by $10,000 as you are right. So this is the credit note. The next thing we need to learn is the purchase order. Purchase order means what we want to order a supplier to supply us. So this is similar to sales order, but this time we are ordering. In case of sales order, the customer was ordering. So the purchase order means we are ordering to buy the goods from a supplier. So these are the source documents that we mainly get our information from. The next thing we need to learn is the books of prime entry. Books of prime entry is the area that we write the transaction preliminary. So this means, for example, the sales day book is considered a book of prime entry. So it consists of all the sales for one day. So this is called sales day book. For example, on 10th January, we've got John's who bought $105 equal goods, and the invoice number was 247. Also, Alex, for example, $31.8. He bought goods, and the number of invoice was 249. So we've got the number of invoice. So we've got the customers. So we've got how much they bought. So this is the sales day book. That's simple to understand. All the sales transactions in one paper. The next may be purchase day book. This is also very similar. And here we wrote what we purchased every day. So this is purchase day book. For example, Reese. From a supplier called Reese, we bought something at £948 and invoice number was R459. So this is an example of the purchase day book. So you need to understand the purchase day book is all the purchases that we wrote for one day in a paper. The next may be Cashbook. Cashbook is also very easy to understand. It includes cash receipts and cash payments. Cash receipts, all the cash inflows. Cash payments are all the cash outflows. So if we get them together, we've got the cash book. The next thing we need to learn is the bank statements. Bank statements are the papers that the bank provides us every week, every 3 days, every other day, or even every month. So that depends on the situation, that depends on our agreement with the bank. So the bank may provide us bank statements. Bank statements are the papers that includes all the transactions with our bank account. For example, cash inflows into our bank account, cash outflows from our bank account. So these are all collected in one paper. Bank statements are used to check whether the amount shown in the cash book agrees with the amount shown on the bank statement. Amount shown in the cash book is prepared by us. So we prepare the transactions, cash inflows and outflows in our cash book. Also at the same time, the bank prepares the bank statement. So we compare them. If they agree, then that's okay. There is nothing more to do. Because we are okay, the bank and we have the same calculations. Otherwise, we need to use some techniques of bank reconciliations that we learn in the next lessons. The next thing we need to learn is the petty cash book. Petty cash book is also very similar to cash book, but this time only small transactions are included in the petty cash book. For example, the transactions for $2, $3, $4, or something like this small. So petty cash book, if we want to learn this, we need to know the Imprest system. Imprest system means $250, for example, every day, we've got $250 for petty cash transactions. For small transactions, every day, at the beginning of the day, we spare $250 and then we spend it. For example, all the petty cash payments for one day equal to $55. In this case, at the end of the day, we have $195. So what we have to do is to fill it again to $250. So it means we need to add again $55 so that it equals to the Imprest amount again. So this is the Imprest system. It's one kind of controlling petty cash transactions. This is all for today's lesson. Stay with us with strategic education, subscribe to our channel, and achieve success in your exams. Thank you for your attention.